Hello. Hi, welcome everybody. Welcome to this latest in a series of webinars we've been running. We started doing this at the height of the COVID crisis earlier on this year, and they proved so popular, we've decided to make them a monthly event. We being Property Master, the leading online broker that specialises in buy-to-let mortgages. And we're already getting questions in from you on exactly that topic. So great that I've got with me Property Master's Chief Executive, Angus Stewart, who is going to just say a few words. We'll be picking up your questions and just making some observations really on the state of the buy-to-let mortgage market now, with just a couple of days till we come out of lockdown. But then, Angus, I think I'm not sure it's going to make that much difference next week. So over to you to update us all.
Oh, good morning, everybody, and thanks for joining us today. As Chris has just said, we're coming up towards the end of this second lockdown, which has been slightly different and less onerous, to be perfectly honest, certainly for us, than the first one, because surveyors have been able to continue working and the market has been continuing to operate in terms of getting mortgages, whereas in the first lockdown we had many lenders who had to exit themselves for a significant period of time. We're continuing to trade. All our staff are operating from home as requested by Boris, and it's worked really quite well. Indeed, business is doing well. I've got 2 new mortgage advisors starting next week, and so we're looking forward to working with you guys and sort of helping out on any of your mortgage challenges. We do see changes in the market. It's brilliant to see the vaccines announced. I see light at the end of this long tunnel, but I think we've got another 4 or 5 months of turmoil and challenge until we're getting into next summer, and things will be hopefully back to the way we always used to have them, and enjoying life and pubs and restaurants and theatres and all the things that we're all missing at the moment. I was told yesterday I'm in tier 3. Well, there's something which none of us want to hear. I mean, I'm looking forward to being able to go back to a restaurant and a pub and having a normal life, but I fear I have to wait a little while, just like many of you guys. So let's press on, Chris, and I'm sure some of the questions you've got, we'll be able to talk about the market, and we'll talk about the impact that everything's having on the market at the moment, and hopefully be able to answer some of the questions that different people have got.
Okay, well, thanks for that, Angus. So we are in different tiers around the country, but is the housing market actually open for business? You said surveyors are able to work, so are we not really seeing any impact at the moment?
We are seeing impact. I think there's the housing market is open, to be very clear, and the housing market is buoyant in many ways because of the relaxation on stamp duty, which comes to an end on 31st of March. And that's caused some challenges for lenders because the demand has been significant, but their capability of fulfilling that demand is not so great, and as a result, pricing is being used as a way of manipulating and managing that demand. So lenders have still got people working from home. Let's see what happens there. I mean, just reading some of the comments, I think people have got access to the system. I think some people have probably had some challenges getting the visuals, but I was just a bit concerned that there were people who weren't seeing us and hearing us, but hopefully that's okay. So here we are with a market that is open. It's a market with some restrictions, it's a market with some constraints, and it's a market where lenders are having to use blunt instruments of criteria and price to manage demand. And we're seeing lenders coming in and out of the market, changing their rules reasonably regularly, and that's clearly having an effect on what we can offer our customers.
Yes, you do see new ranges coming out and then being withdrawn, and LTVs going up and back down again, and so on. But what's happening generally with mortgage rates, for example, and pricing? Is it going up? Is it staying the same? Or
yeah, I'm seeing, if you were looking at a trend, I think rates are going up, even though base rate is maintaining at 0.1%. I think that's for 2 reasons. I think one is it's a means of managing demand because the lenders have got some operational constraints. I think it's also a reflection of potential increased risk and concerns about risk, and they're pricing in the risk. I think none of us really know what's happening, or in terms of the longer term picture. What do we know? We know that the economy has been badly damaged by COVID. We've got the uncertainties, as I sit here, of Brexit, as whether or not we're going to have an agreement or not, and what the impact might be on the economy from that. We have got none of us have got a crystal ball, and so we've got vaccines being announced. Well, that's brilliant, but you've got the challenge of rolling it out, and what does that mean? You've got short-term challenges. If this infection spreads too rapidly, the NHS can't cope. So, how do you keep a lid on that? And what's just the general impact on people as a result of that? And we're seeing the hospitality industry being decimated, and a lot of the people who live in some of the buy-to-let properties that our customers have got might be employed in the hospitality industry, and as a result, are they under financial pressure? Is there a risk in terms of lending on certain types of property where you might have tenants in there who are unable to make payment? But I think to a large extent, I can see light at the end of the tunnel, and I can see that although rates might be rising a bit, it's not going to be the end of the world. We're still in a relatively low rate environment.
We've picking up on some of those issues. We've got a few questions here from Vimal. I don't know if Vimal's on the line, but he's asking why are current prices going up when a recession is looming? Are prices going to fall over in the next couple of years?
I think we've got. I don't quite know which prices he's talking about. So let's sort of split the market up into different types of price. If he's talking about rents and the rents that you can achieve, I think rents are holding up pretty well, and demand for properties, certainly outside central London from a rental perspective, are increasing. I mean, certainly in my local area, talking to some of the local letting agents, properties, as long as they're not too expensive, sort of typical sort of 2-3 bed property, they're going within a few days because there is significant demand. I don't know whether that demand is being triggered by people moving out of London, or whether it's being triggered by families splitting up and therefore requiring some additional accommodation from one of those members. But certainly there is demand there, and rents are holding up quite nicely. I think central London, the very central London, I think we're seeing slightly different there. People are recognising that they're not going to work in an office. They don't need to be bang in the middle of central London. They can work quite happily from home, as I am today. And as a result of that, we are seeing a drop in rental demand for central London. But then the suburbs of London, where people may be moving out because they're looking at a change in working practice as we all get back to normality, but it won't be quite the same normal. I cannot see that you're going to have most offices in central London having people going in 5 days a week, commuting in. They'll be going in for 2 days a week. And I know when I reopen my business, we're looking to bring people in 2 days a week and have them working home 3 days a week. It's worked so well, why change it? Staff like it, people are comfortable, and therefore I can see that the suburbs of London are probably going to get an increase in rental demand. Central London is going to have a decrease in rental demand, and that's going to end up getting reflected in some of the house prices. If we look at house price demand and house prices themselves, there's been a degree of sort of volatility there. I mean, prices have gone up because of stamp duty and because of that increased short-term demand after the pent-up demand of the first lockdown, and we saw a sort of peak in sort of July, August. Quite where that's going to end up, I don't think we know. But again, with the announcement of the vaccine, I think on the whole, prices out of central London will hold up relatively well because there's going to be sustained demand there. I do think we'll probably get a little dip after the end of the stamp duty holiday. So, I could imagine a little dip in April where people have, missed that opportunity. But on the whole, I think it's going to hold up relatively well.
And certainly many commentators are saying the buy-to-let market is resilient. There may be some changes, and as you say, it's all about location, isn't it?
It is location, and the buy-to-let market is going to be resilient. There is growing demand. All the stats you say over the next few years, growing demand for private rental property. It's the only, if people can't get on the mortgage, residential mortgage ladder, and so many people can't, and if there is a growing population and there's growing demand, the social housing sector hasn't got the capacity to cope with that increasing demand. The only opportunity, therefore, is private rental, and therefore, despite all the challenges of the private rental market and the impact that the government's had with their changes in legislation over the last few years, I believe there is continuing demand, and it's not a bad place to be if you can get the right property at the right price with the right quality tenants.
Excellent, good news there. Let's pick up some specific questions, Angus. We've got a question here from Penny. I don't know if Penny is on the line. Her question, it's around the cladding issue, and there has been so much media coverage around this, and it sounds as if Penny's hit a bit of a brick wall here. She's applying for a remortgage on a 3-storey maisonette. The surveyor has given a nil valuation, and we've heard about these, because it doesn't have the EWS1 certificate. Advice from RICS indicates that's not necessary for all properties, and I think the government has said something similar recently. But of course, the mortgage companies are, in some instances, taking a blanket approach. It's a flat, it needs a certificate. What can we say to Penny?
Well, Penny, I don't believe you've applied through us for this remortgage. Otherwise, I think I would have been made aware of the challenge. Generally, my staff, if we've got particular problems like this, will raise them with me, and I can use my contacts with the lenders to try and help things through. So one thing I would say is, by all means, stick an application into us, and we can look at it properly on your behalf. But talking generally, I mean, there is an issue out there with lenders, understandably, putting some blanket rules down in terms of their criteria. And if there's cladding, they want an EWS. And the challenge here is trying to get one of those certificates is a bit like gold dust, because the surveyors are too busy trying to do it. Trying to get a surveyor to actually give you a certificate to say that you're okay is proving a challenge. And we have had customers where that has proven to be a challenge. I do feel sorry. I mean, there are tens of thousands of people who are effectively mortgage prisoners in their flats and cannot get a remo, can't move, can't sell until some of these challenges are sorted. Now, we're all aware of some of those challenges, and we are working with other parties, and I think I believe we've invited the chief exec of the National Residential Landlords Association onto our next webinar, which I think is 8th of January.
8th of January,
yes. And they're a lobbying organisation. So what I would say to you, Penny, is put your application into us. We'll see what we can do with the lender. I'm very happy to talk to Ben at the NRLA. As I said, we're hoping to have him with us next month, and put the question to him in terms of what they're doing as a lobbying organisation with the government to try and resolve some of these things. It is difficult. It's not easy. Lenders err on the side of caution, and the lenders have got sufficient demand there that they can turn down the odd mortgage because they don't need that business. And that's part of the challenge that I think you're seeing here, that if it's unnecessary for them to go down that route, why would they, when they can look at other properties and give mortgages to other people without the hassle of sorting out EWSs?
Which is sometimes where we are able to help with the contacts that we have, because it's obviously easier for a lender to say no in a blanket fashion, isn't it?
Oh, absolutely. And we will intervene and talk to senior people within the lender where we think there is they're being unnecessarily harsh, and we will appeal certain situations. And we have a reasonably good success rate when we can actually put the facts to somebody who can make a manual decision as opposed to computer says no. Not always successful, but sometimes we can actually make a difference in that regard.
Okay. We've got another question here from Lucy. I think Lucy is on the line because I was chatting with her earlier. Lucy's trying to remortgage a building with 5 flats. All the flats have tenants, but the one smallest flat is let to Lucy's son. Lenders are hesitating to give a mortgage because of this. Why? Why are they taking that view?
Yeah, isn't it crazy? You'd think they'd think it was much safer when you've got your own son there and whatever. But lenders on the whole don't like situations where there are family lets. It introduces additional complexities. It can move it from an unregulated into a regulated environment. Again, I don't think, Lucy, you're doing this through us. Otherwise, I think I would be aware of the situation. So I think the first thing is see if we can help. I'm reasonably confident we could probably do something for you. But some general advice: if you've got that situation and you've got 5 flats in a building, then as long as they are of sufficient size, and by that I mean certainly at least 25 square meters and ideally 30 square meters, I would separate them out into different units and have different leases on each flat. So you might be in a situation where you could remortgage 4 of those flats as separate entities. The one that your son's in, which you said was the smallest, you just leave it as a separate flat which you don't remortgage, and that might give you the coverage you need. We also know some other lenders who will consider family let situations, and we have successfully placed family let buy-to-lets in this sort of scenario that you've got. But you do pay a premium for that because there are some, there are few and far fewer lenders who are willing to consider, as you've found. But please, Lucy, put the application in through on the Property Master system, talk to one of my colleagues, and we will do our best to help you in that regard.
Okay, good advice. A question from Vimal here. Vimal is adding additional internal flooring. He's seeking to convert a 2-bedroom house into 4 for bedsits. Is it lucrative? How do we look out for the single room market? What sort of return on investment might there be? So is this worth Vimal's while? And what are the implications for mortgages as well?
Okay, so he's basically creating an HMO, a house of multiple occupation, and it can be a significantly better yield than you can get on a standard 2-bedroom property. So well worth considering. Things to bear in mind: you will probably need a license for that property from the local authority. So look into the license route and the costs of that license route. Often about £1,000 to sort out a license where it's required. Secondly, look at room sizes and what those sizes will be after you've done the conversion. If you're creating an HMO, there are certain minimum sizes of room that you need to consider, whether there's 1 adult in there, 2 adults in here, or adult with child. And so there are some minimum sizes. They can also be increased by local authorities. So there could be some situations where, depending on where you live, you've got different minimum room sizes. So look into that before you do your conversion, Vimal. The other thing, can you get a mortgage on an HMO? Yes, you can get a mortgage. If you're a first-time landlord, it will count against you. Lenders like experience, and they like experienced landlords to look at HMOs because they're more complex to manage. But if you've already got some experience as being a landlord, then moving into an HMO may not be a bad thing to do. You can generally get a better return. As ever, location is what matters. So you need to make sure that you're in an area which will attract and sustain HMO type customers, and not every location suits that. But yeah, I would look carefully at it and see what you can do. Again, if you want to know which lenders were willing to consider you for that sort of property, go on to Property Master, put your details in. If you're a first-time landlord, say so. There are some lenders who'll consider it, but you cut yourself out significantly from the market if you're a first-time landlord in that space.
I think with regard to HMOs, there was a dash into student accommodation, wasn't there, a little while back? But obviously the university sector's been quite heavily impacted by COVID. What are you seeing there, Angus?
Yeah, well, we went through a bit of a rough time with student accommodation back in April. when the universities closed and a lot of students were at home and so on. And yeah, there are landlords out there who caught a cold because of their focus on the student market. At the moment we've had students go back to university, but then get effectively locked down inside their properties. Hardly ideal. I can see that the next 3 or 4 months could be challenging for students back at university. They're trying to get them home for Christmas, but what's going to happen after Christmas? Will they be able to go back into their university accommodation? Probably. Will they be doing lessons from the university accommodation? Also probably, until we've got a vaccine, until things return a bit more to normal. So look at student accommodation with care. I do think the market will reopen for that. I do think if you've got a longer term view, there's an opportunity there. But I would just take care, be cautious. I'm not saying lenders aren't lending on student stuff, but they're probably going to be a bit more cautious as well at this moment in time, understanding what the implications might be on your cash flow.
Yeah, still a lot of issues to work through there. Just to say, everybody, great to have you on the line. Don't forget, if you have questions, you can put them in the question box or simply pop them in the chat room if that's easier. Vanessa, I think you wanted to pose a question, but I think you might have lost your connection at some point. So if you do want to post that question, please pop it in the chat box or in the ask a question box if that's easier. Just thinking, Angus, we may have people on the line who are facing difficulties with tenants at the moment. I mean, what is the state of play with regards to evictions and the courts? Are the courts open? What's happening now?
The courts are open again. However, evicting tenants is more problematical at the moment. I mean, I think when you used to be on a 2-month process, you're now on a 6-month process to be able to evict. Bailiffs are still not taking action. I don't think until at least January are bailiffs actually evicting people. The courts themselves will prioritise the situation in terms of when they will move forward with the case. If you've got situations of significant antisocial behaviour, they like to prioritise those, for example, more than somebody who's just struggling with rent and although it's causing you pain, is probably not being a challenge within the local environment. So evictions are a real issue for certain landlords who are struggling at the moment, which sort of brings us on to payment holidays. And if you've got tenants who aren't paying, what can you do about it? And payment holidays, I think, is another area where you need to take real care. You can have up to 6 months of payment holiday. If you haven't taken a payment holiday already, you can still get up to 3 months. They did extend it again for another 3 months. The one thing I would say is, if you can avoid a payment holiday, avoid it at all costs. It will impact you on any future borrowing you're trying to do. Lenders look negatively on people who've taken payment holidays, even though technically it does not affect your credit file, because you're allowed to do it. When somebody comes up for a remortgage or to look at a new application, if you've been in a position where you've had to take a payment holiday, we're finding lenders will use that against you to a degree. That said, it is better to take a payment holiday than go into default. So there's a level of priority there in terms of you need to give due consideration to.
That's kind of weighing it up, isn't it? We are seeing with some lenders, well, I think it was NatWest in the residential space this week was saying that they are discounting anyone who's taken a self-employment income support payment. They're kind of viewing that as an indication that you are under some sort of stress. So you do need to think very carefully before you take advantage of these schemes.
Yeah, and I to a large degree, I think that's a little unfortunate that the lenders are taking that sort of black and white view of situations. And I think the NatWest situation was more getting positioned towards residential mortgages than buy to let. But nevertheless, if somebody's been impacted by COVID and the government is offering them some money to assist, I think it's a little tough on that poor individual to find that then that subsequently stops them getting the mortgage that they would normally have been able to get in a non-COVID environment. I understand the lenders wanted to mitigate risk, but it's a bit of a broad brush sometimes, and I think that's just difficult in this market. One doesn't know how long some of these views are going to go on for either. Once we're out of the COVID situation, will they still have that view that if in the last 12 months you've taken some support, that they're not going to consider you? Maybe not. We'll see. But I do look at the self-employed in particular. I think they're having a very rough time as a result of COVID, as a result of the way the lenders are putting restrictions on them generally, and that's not ideal for certain types of individuals.
Absolutely. I don't know, Angus, if you can see the chat box, but Vanessa has put a number of comments, and she's asking a question. She has a complex issue here, but it does sound quite similar, really, I think, to one of our earlier questioners, because I think she is living in one of the parts of the property. How is that going to work? It's an HMO. Can you see that, Angus?
Yeah,
Can you see her comments?
Yeah, I think Vanessa, firstly I'd say talk to us properly, not on here, so we can look in more detail. Do lenders take this rule seriously? The answer is yes, they do. And whether if you're classed as a consumer buy-to-let, that takes many lenders out of the consideration for you. And that's because some of them just don't like consumer buy-to-let. Some of them aren't regulated themselves, and therefore not allowed to do anything that falls into the consumer buy-to-let space, and they don't want to get caught on the periphery of some of the rules. I'm certain that your situation, we can find some solutions for it, but I think we just need to look in a little more detail about your personal circumstances. But it is cleaner and easier if you are not living in a property that you are trying to rent out. So your situation where you've got 5 bedrooms and you're living in one of them and you're getting a great return, that might be the case. Just because you own another property does not necessarily mean that you escape from the regulations. Different lenders have different views on the consumer buy-to-let regulations. There is not, even though they are set by the FCA and the Prudential PRA, my understanding of the rules and what the different lenders see are different perspectives. So we've built within Property Master our understanding, which we know complies with some other, many of the lenders, but I see lenders out there who take a slightly nuanced view and will say, our perspective is wrong, because it's not black and white. The rules themselves leave areas of interpretation, and when you get interpretation, you get lack of certainty, and maybe that's what you've been seeing in some of the conversations you've been having.
Yeah, it does help to have someone, obviously, like ourselves, who works with all the lenders across the piece. I was talking to somebody in your team this week, Angus, who said that the lending criteria for just one of the lenders we deal with runs into 18 pages. So there's plenty of room for nuance there.
Yeah, the criteria are long and complicated, and that being the case, we that's what we do. That's what we've built a system to try and automate some of those complexities, but even that can only do 95% of the job, and you will get areas that fall outside the norm. But we've got specialists who've got the skills to dig under the skin of those and find solutions.
Great. There's a question from Richard, really, coming back to the discussion we were just having about landlords having issues with tenants. Richard asked, when do you think repossessions will start for non-mortgage payments?
Good question. I don't think we're going to get significant movement this side of Easter, being honest. I think if we've got people starting to be vaccinated, market starting to get back to normal, there's going to be a catch up at that point. But yeah, I wouldn't. I don't think I'd hold my breath, this side of Easter.
I think, as you say, they are prioritising the so-called egregious cases. So they're going to go first, and then the queue is going to be very long, I think.
So I'm sorry. I mean, it may not be good news for you, but yeah, I think we've just got to be realistic about it.
I mean, what's the general advice about dealing with tenants if you think they are going to have a problem, or indeed are already having a problem?
I think talk to your tenants, try and come to some form of agreement with them, try and get some rent out if you can from them. If they're moving into sort of housing benefit or universal credit situation, see if you can get that rent paid directly to you rather than going to the tenant. See what you can do to mitigate your loss. But some of you may be in a difficult situation where you're not getting the rent. The tenant honestly can't afford to pay you the rent, and you can't legally evict them. And that's a really tough position for any landlord to find themselves in. And I do feel sorry for any of you who are in that challenging situation. I say, if the worst comes to the worst, see what you can do in terms of a payment holiday. I would say talk to your lender if you are that financially pressured to try and minimise the risk and situation. If you need to, maybe some opportunity to remortgage to get some equity out. Again, it will depend very much on your personal situation. But if they're not paying rent and it's not performing, that would count against you in terms of getting a remortgage on a particular property. But maybe there are some things we can do across a portfolio where you've got other better performing properties to balance out some of the challenges. Don't know. But if you've got challenging situations, we're happy to talk to you about what some of the options might be.
And again, I'm sure this is an issue we can talk to Ben at the NRLA about when we're back together in the new year. He may well have some sort of an update in terms of progress. Any questions, guys? Just pop them in the chat box or in the ask a question box. We have a question from Carol, Angus. Are lenders taking into account both a salary, first-time buyer, and the income from a rent share with a friend?
Depends on the lender, is the honest answer. There are a lot of lenders who will use something called top slicing. So if the property you're trying to rent out does not meet the affordability rules, then many lenders will take into consideration your salary and other income that you might have to balance that out. So again, put the information into Property Master, see what it says. Some of the lenders will come out with a little squiggle on the side. If you ever see something that's offered to you as a lender but with a little orange squiggle, it means that top slicing or other affordability will need to be taken into consideration, and that might help. What I would say at this moment is that a bit of sort of exciting news for our loyal customer base. Early next week, we'll be launching a new mortgage calculator on our website. That will enable you to go in and put in just some very basic information, such as how much you're looking to borrow, what the value of your property is, and what sort of rent are you getting. And that will show you a couple of things. One, what's the maximum we believe you can get out of a loan, depending on your tax position, whether you're a basic rate, higher rate, or whether you're doing the borrowing through a limited company. But also, we have built some special technology to enable you to optimize the best mortgage you can get out. So let's hypothesize that you were looking at doing a 75% mortgage on a particular property, and that's what you were trying to do. What we've built will actually say to you, we know that you were looking for, say, £150,000 of mortgage on this particular property at 75%. However, if you dropped the amount you're seeking by a few £1,000s, and we'll tell you how much, for a property of that valuation, we can see that you could save a significant sum by borrowing slightly less because of the affordability rules that would apply to you from a different lender. And we will, we've seen situations in our test environment where we can save people, £100-200 a month by borrowing, just a few £1,000s less than they thought they needed. And so this might be quite an interesting thing for landlords to look at. And it doesn't give you the name of the lender, but if you register, talk to us, we'll be able to work with you to provide you with the details of how you can get that particular mortgage. As I say, you might be looking for 175, but we'll be able to say, if you actually go for 172, we can save your cost by £100 a month. Surely that's interesting to you because of the optimizing technology we're using looking at affordability.
Because I think people tend to think in terms of the LTV stages, which are actually quite big, aren't they?
Well, you've got the LTV bands, which are quite big, but affordability is such a key factor in the buy-to-let market, and most people don't understand how it works, and the fact that it differs for every single lender. It differs by tax rate, it differs by type of property. So an HMO generally will have different affordability rules to a standard property. And we've built some clever technology sitting behind this to cross-match between the LTV and the affordability to show you some better deals where feasible. Because again, most buy-to-let landlords, a couple of £1,000 either way is probably not the key thing for them. It's getting the best deal and minimising what their monthly payments are. And if you need to put another £2,000 in at the purchase time or the remo time, but you can save yourself £100 a month, that's probably quite a good trade-off. So this is quite interesting. Nothing else in the market that can do it. And I say that will launch early next week. We're just finalising the user tests at the moment.
So we'll help our customers play the system, as it were, in their favour for once.
Yeah, but I don't think it's playing the system. It's understanding how the system works and making sure that you've got the best deal possible for you. And that's what we're here for.
Excellent. Well, Richard's just come back, actually. He says the conversation we were talking about the courts and evictions and so on. He says, I was referring more to repossessing houses of landlords or non-buy-to-let property owners. How is that likely to pan out, Angus, do you think?
I think it's going to be similar timescales. Lenders are clearly not going to be aggressive at the moment in this market because it just would look particularly bad. I think it depends on the degree of honesty you've had with that lender. And I think if you've been communicating with them, then I think the chances of a repossession is less than if you've been totally ignoring them, not paying them, and they're trying to go through the process. But they're going to be in the same situation that they will need to take court action to finalise some form of repossession. And again, if you're a struggling landlord, talk to the lender. I'm not hearing at the moment about aggressive lender action. Maybe some pre-COVID stuff, but certainly as a result of COVID, I think you'll be relatively safe at the moment, Richard. But my advice: talk to the lender. Again, if you're one of our customers and we can assist, then by all means talk to us, and we will see what we can do to help you.
Excellent. Well, sort of one last question, I think, here. Oh, Carol's looking forward to the new calculator. Carol, we'll make sure that we get you a link.
Yeah, okay, that's brilliant. Yeah.
Question here from Salman. My tenant is on a rolling contract and there are no issues so far, and I'd like to keep it like that. But the tenant is insisting on a renewal contract. I prefer the flexibility of a rolling one. I guess it will be 2 months' notice, whereby with the renewed contract it might fall into the current 6 months' notice. This is it has a buy-to-let mortgage on the property and an assured short-hold tenancy, which expired in October. Ooh, so rolling contract versus...
Yeah, well, I understand the situation. So he was on a 1 year or fixed rate or whatever on his AST. He's now on a 2 month notice from the landlord, possibly only 1 month notice from the tenant, depending on the nature of the contract. And I can understand. What was the name of the landlord? Sorry, I missed that.
Salman.
Exactly. I can understand that why you want the flexibility. I can also understand from the tenant's perspective where he may want certainty. Now, what the tenant probably doesn't appreciate is that given the way we are at the moment, you couldn't really evict him within 6 months because of the current rules. So, the fact that he's continuing to pay and is a good customer, he's actually got security of tenure there without having another 1 year fixed rate. And so you're both probably getting what you want. You don't want to be in a position because presumably you want to be able to sell the property at some stage. I think that's, if you've got a good paying tenant, the only situation I can see why you wouldn't want to have them on a fixed term contract is if you wanted to have the flexibility of selling. And as I say, your contract might say you're on 2 months' notice. The reality is if that tenant didn't move out with that 2 months' notice, you would be back into the court situation currently with minimum 6 months to try and get him out. So I think my advice to you is if the landlord, if the tenant is looking for, say, a 12-month renewal of the AST, you've got a good guy in there, I think I'd give him his 12 months. It's not going to make a huge amount of difference to you in that you've probably got at least 6 months notice to give if you try and evict him through the courts. It gives the tenant what he's looking for, and you might be able to negotiate a small increase as part of the deal. So I think if I was in your shoes, I'd negotiate a slight increase in rent. I'd go for 12 months and see where we go from there. And if the tenant doesn't want to pay the extra, well, keep them on the rolling contract, which is what you want, to give you the greater flexibility, and see, it could be a win for both of you.
Could be a win-win. Excellent. Thanks, Angus. Well, we've probably gone over a little bit at the time we expected, which is fantastic. We've had so many great questions from people. We'll certainly be making sure you hear more about our calculator when it's launched next week. Thank you all very much for joining us. We'll be back again on January the 8th when we'll be joined by Ben Beadle of the National Residential Landlords Association, and I'm sure some of these issues will come up again and we can get Ben's take on that. So thank you all very much for joining us. Hope to see you all again soon.
Yeah,
Bye-bye.
thanks everybody. Cheers. Bye-bye.